And with major indexes at or near new highs, we heard today from some well-known investors and CEOs who gave us their take on the market and the economy.
I don't think it's a breakout, and I don't think it's particularly overbought either, because what you have is the weight of money. There's a certain amount of money out there, a lot of money. Central banks bought $15 trillion of assets and so on. So we have a lot of money. And the question is where that money goes.
There are a lot of valuable companies. Rates are very low. You know, it looks like the stock markets are forecasting a pretty rosy outcome. And the bond market, it's hard to say what it's forecasting because, you know, it's a lot of bonds being bought by central banks. So it's hard to tell what that really means when rates are this low in an environment which is not so bad.
And I don't think today there looks like there's going to be a recession in 2020. I think there's enough strength in the economy to go past 2020. I can't predict further than that. But right now, I don't think there's a recession likely in 2020 unless some exogenous event we can't predict all of a sudden happens in a geopolitical world.
So let's turn now to Jack Ablin to talk more about the new highs that we're making in the market today. He is founding partner and chief investment officer at Cresset Capital. Good to see you again, Jack. Welcome back.
Hi. Thanks, Sue.
You say that the next catalyst for this market has to be fiscal. Specifically, what are you looking for?
Sure. I mean, we've pulled out all the stops on monetary policy, right? 3 rate cuts this year. We have reasonable profit growth, nothing fantastic. Remember, last quarter's profit expectations were negative, so beating that number was pretty easy. Analysts are expecting probably high single-digit profit growth over the next 4 quarters, and that's likely to come down. So what we really need to get to that next level is something else, something other than monetary policy. We need either a breakthrough on this trade clash with China. We need some sort of resolution to Brexit that's better than a no-deal Brexit. We need a little more clarity there. We'd love to have European countries start to actually spend money and build some infrastructure. And that's really what we need to get this market to move to the next leg up.
Yeah, I was thinking about that today, Jack. Isn't it interesting that even as we have these so-called bricks in the wall of worry, Brexit and the trade war and Fed policy that was questionable for a long time, we're sitting here at all-time highs today. If anything, isn't that enough to get you to think twice about wanting to invest in a market that's already as high as it's ever been?
That's it. I mean, at the end of the day, I've got to look at the numbers. I've got to look at valuation. And yeah, relative to bonds, stocks still appear to be reasonably priced. But relative to themselves and relative to their own history, stocks are expensive. So the question is, assets are probably inflated because of the egregiously low interest rates. We are seeing a preponderance of corporate debt, which certainly could spell trouble in a downturn. Right now is not an issue. But overall, in a market like this, it's very difficult to jump in with both feet and expect to make a lot of money over the next few years.
But according to your strategy, you still like some things in the market, like master limited partnerships. Why do you like those, and what tranche?
Sure. So master limited partnerships are really energy infrastructure. Bob just talked about how energy, being the worst performing sector this year, is starting to make a comeback. I think partially because it is cheap. They're trading on a valuation basis in the bottom quartile of their historical range. But also the fact is, and we heard that earlier, that we don't see a recession in sight. I'm not wringing my hands over the future of the U.S. economy. I think we're in really good shape. The consumer is in fantastic shape. So I think that given that backdrop, low interest rates and a reasonable economy, energy infrastructure, and what we like are the C Corps, not just the master limited partnerships themselves, are an interesting deal right now that pay a pretty attractive yield too.
All right, Jack, we'll leave it there. Thank you so much. Jack Ablin with Cresset Capital.
Thank you, Sue.